Okay, let's take a look at the markets here this morning and what we got. So let's look at the entire session since midnight, and we'll see what we got this morning with news coming out here in about 8 more minutes. So if you look since midnight, we started our downtrend, our 30-year back-tested trend started rolling over right there at 3 o'clock this morning. The London Open, we start selling off pretty hard. Now, what we want to do is we want to try to find when the market's going to pull back, grab liquidity, catch the wrongly positioned traders or the counter trend traders. We want them to pull the market back into our sell zones, and then we want to find a continuation. Now, we can do it a few ways. We have an indicator and we have a strategy to do that. So if you look at our indicators, our indicator-based system, we want to pull back into these sell zones. So this is our 25 sell zone. You can see these little dots or dashes. This is our proprietary sell zones where the market likes to pull back into this zone, and it likes to continue from that zone in the direction of the move. Yesterday, I typed in, I gave a big heads up on a few of the moves, big moves before they happen. We'll go over that in a second. But this is where we want to try to get short. So if you notice, we're in a downtrend. We're in a downtrend from the London Open. It retraces. You see these green candles. That's the counter trend traders coming in the market, or the novice traders trying to push the market back up, thinking it's a low. We come into my sell zone. You got to at least close by a candle inside of at least at or inside of the sell zone, and then you need a reversal candle. Once that reversal candle comes in place, we're looking for a move in the direction of the push. So our first sell signal in the sell zone came at 4:25 this morning. 17 down to 04 was the potential on that first move. Then the market sells off again. Counter trend traders come back in the market. It gets into my sell zone again. Right there's my dashes. It cannot close outside of the sell zone. If it closes outside of it, the trade is null and void before the pull-in candle. It has to be very accurate to reverse inside the zone. We get a reversal, and the reversal comes right at inside the sell zone. And again, potential on this one, 11 got as low as 95. So it fell 16 S&P points here this morning. So we've had two good sell zones this morning, as you can tell. We're going into the news now. We're looking for, we're still red, so we're still in a possible move down in the market. Now, let's look at yesterday real quick because I want to show you our yellow triggers that come up. Now, the yellow triggers are going to come up inside of our, and this is where the strategy will get short or long. So what happens is if you get inside of our 30-year back-tested zone and reverse inside of our 30-year back-tested zone, it has to reverse inside of our 30-year back-tested zone. It's got to get inside of it, let the counters get into it, and not close above it. It will only take trades inside of the zone because that's where there's a major reaction. I have some settings for you members already that will be on the members download page for this on smaller Renko sizes and larger. But you're looking for, if this yellow trigger candle comes in, you'll see an arrow fire. Your speaker will show an audible alert. This is a short. This has happened last night. This is potential 55 down to 46, almost a 9-point run when the yellow trigger comes in inside the candle. Now, this is what's called confluence because you're in my sell zone, in a downtrend, and inside my 30-year back-tested zone. So this is what's called a confluence trade. We love seeing setups that conflue like this. And it can be the other way too. It can break down and be inside of my 30-year back-tested zone. And if it reverses inside the zone, you'll get a yellow trigger. This happened last night also. This is another confluence trade because you're inside of my sell zone. You can see it got inside right there by a close, and inside my 30-year back-tested zone. This is confluence. That's why the market reacted hard last night again. 64.5 down to 50. Another 14 S&P point drop. So into the close, we had some more confluence trades. At the close here, at the time of day trade. It got inside of my 30-year back tested zone. It's not confluence because it never got into the buy zone, but it got inside my 30-year back tested zone. It reversed. You'll get an arrow, a yellow trigger, entry candle, and the market rallied yesterday. I talk about this trade all the time. At the close, at 350 to 410, we see some big movement in the S&P on the futures. This moved from 77 to 95, 77, 95 in less than 1 minute. I mean, it was just cranking to the upside where it almost had a 20-point run on the S&P from my yellow trigger that fired in the room yesterday. Then we had another one. It was a yellow. It was a red downtrend. Got inside of my 30-year back tested zone. Did not close outside of it before the yellow trigger. And it was a nice trade. This was right at my time of day trade. My 350 time of day trade I talk about all the time happened at 357. The yellow trigger came in at 79, and the market got cranked down as low as 58. We got a real nice move, 79 to 58, over 21 S&P points on that one. And then the one before that, it got inside of my 30-year back tested zone, reversed, and this is started the move. This is at 82 down to 76 3/4. So then earlier in the session, if we look what happened, I typed this in the room. I said 205 ES setting up for confluence short if you can pull in. Now this is right here. I saw the market coming into the confluence. It was inside my 30-year back tested zone. 30-year back tested zone. It was inside of it, and also was inside of my normal 25 where the market, the algos like to pull it back. This is a confluence trade. And sure enough, I had a yellow trigger right after I typed that in, and it was from 85, and the market went all the way down to 65, 20 S&P points. I gave you guys a heads up in the room on that one, and that's why these are leading indicators. You can see when the market starts counter-trend trading itself. When these yellow triggers come in, my alarm went off on my computer, a big beeping sound saying that this market's looking to roll over, and it fell 20 S&P points. Then I gave another heads up. I gave another heads up right here. I said at 143, sell set up on ES coming. What I saw was here. Let me turn this off 1 second. The news just came out, guys. 1 second. So I saw that that we're coming into. We'll let the news settle down for 5 minutes, and we'll start stalking some trades. So we came into my zone. My zone. Now it's not a confluence zone because it broke my 30-year back tested zone, but it got into my sell zone with trend. There's your reversal candle. So you won't see a yellow trigger if you break outside of my 30-year back tested zone. It's got to stay inside of it, okay? It's got to stay inside of it and then reverse, and then you get a yellow trigger candle. So ideally what you want is, I saw this coming up in the sell zone though. I said sell setup coming on the S&P. I was correct. It gave a reversal candle, 99.5. It got as low as 82. So it fell 15 S&P points. But this is what you really want to look for. You want to see these yellow triggers come in, this yellow trigger candle come in right there when you are inside of the 30-year back tested zone and my sell zone. This is the best trade you're going to get in the room. When you see that happen, you can auto trade this and have that auto, or you can let it. You can do the indicator based system also. So those were in the thing. Then we had a few in the morning. We had one in the morning, just got cranked to the downside. This is a beautiful trade. So we start breaking down. Then we came back inside my 30-year back tested zone. And remember, these zones, I have a setting for you members, which you guys are going to love on the S&P and the NASDAQ futures, that when it gets inside the zone, it's looking to trade. It's looking to go to work, right? We get inside the zone. We don't break the zone, and we get what's called a retest short. That's where the market looks to reverse. These are all these algorithms out there. These are all algorithms out there. You got your Goldman Sachs Delta algorithm. You got all these different algorithms that control the market. These zones typically reverse the market when you're inside of it. So what we want to do is, if you see it get inside the zone, whether it be red or green zone, we want to see the market move. We have a trade going on the NASDAQ futures here with the automated trader. Exactly that. we got inside of the zone. So you're getting inside the zone. News just came out. We had a couple trades on the NASDAQ futures already. So if you notice, it got inside of the zone, and then I got a reversal candle. So it got inside of the zone, never broke the zone, and then I got the yellow trigger, and it fired in. Right now, it's got a reverse right here, or it will have a sell signal, but it did not do it, so it won't take a trade. And here it got inside of the zone. I'm going to run this auto for you today and put it up in the upper left-hand corner all day for you guys to watch. So you guys can watch this trade on the NASDAQ futures. Tons of trades on the NASDAQ futures, but we'll put that up there so you can see how it works. But inside of the zone, there's your yellow trigger as far as that goes. So this is a NASDAQ, obviously. This is a fast. I have it on a fast Renko candle right now, 1135. So it's a very fast moving market. That's to show you how you get inside of the zone, and then you get a reversal candle, and you can see what type of movement we usually get outside that. So you can do it a few ways. You can do just the yellow trigger comes up if you're inside of my 30-year backtested zone. When it comes up, an arrow will fire and an audible alert will happen. That's one. Or two, you can auto trade this also. So let's say that you wanted to auto trade this S&P also. You can do the same thing where we can auto trade it, where the fill's going to be, when these yellow triggers come up, the fill's going to be the low of this candle, plus or minus a few ticks. So it's going to be the low of this candle. Let me get this things come up. I just turned it on here. So it's going to be the fill that's going to be the low of this candle. It's not going to take any trades. So NASDAQ futures had another trade just now. So you see how we get inside of the zone. You get inside of the zone. You get the yellow trigger that fires. It's going to fill right there. See how it just went inside of the zone? It just filled again. Now I got to break even after my first on the auto. I got to break even after the second contract is hit, not the first. Usually after the first is too shallow. You're going to get tapped out a lot. So this will go break even after the second contract is hit. Break even +1. You can see these got inside of my sell zone, got the yellow trigger. They filled with the auto immediately. Same thing with the S&P. You're able to use the auto or the indicator. This is different than all my previous autos and strategies. I've got it going with the zone, because the more I worked with this, what I understood about these markets is when we tested this for the last 30 years as a best zone to reverse price, why not just trade inside of that zone or at that zone at all times? Because what the market will do, it will gravitate towards these zones and get inside these zones, and then it gets away from the zones. Then it gets back inside the zones, and then gets away from the zones. Then gets back inside the zones and gets away from the zones. And the market just works orderly that every day on a day-to-day basis on all these markets. So what I did is I put an indicator and strategy to reflect that. So now we have an indicator and strategy where you can reflect getting inside the zone. It won't take trades unless you get inside of the zone. Inside of the zone. It can't close outside of the zone, 30-year back to the zone, and then you'll get a yellow trigger candle to reverse. Like I said, you can use this not as a strategy if you don't want. You can use this as just an indicator, and your alerts will go off on your computer when that yellow trigger comes up. So these big trades yesterday that happened, that your alert system went right off here at 9:18 in the morning. Your computer started beeping saying, hey, I got a potential short on the S&P right here, right there at that close of that candle. It will be live. It's not lagging. It does not repaint. It's saying, hey, I got a short on the S&P. Okay. And then we come in, market starts moving down hard, starts moving again. And it says, hey, I got a short on the S&P here. When we get inside of my sell zone with trend, I give you a heads up on that. I typed it in the room. This is the big one though. This is the big one, 2:05 p.m. ES setting up for Confluent short if it can pull in. I was right on top of that in the room for you guys. And sure enough, it got inside of my regular zone, and then it got pulled in with the yellow trigger, and the market just got cranked to the downside. So you can auto trade that if you want, or you can manually chart trade that yellow trigger candle. It went up there, will work on there too. It works on all markets, Venkat. crude oil, gold. They have to have the same characteristic too. They got to come inside of it, and I'll show you those guys too. It's got to do like the Nasdaq futures doing right now. It's got to get inside of the difference between our previous strategies, Venkat. It would still take trades outside of the zone. This will only take trades inside of the zone. My 30-year backtested zone. It won't take trades anywhere other than inside the zone. So it has to get into gold. It has to get into crude oil. If you're doing Forex, if you're doing whatever you're doing, if you're doing crypto, if you're doing any type of futures, it's got to get into my 30-year backtested zone in reverse. It has to do that, or it will not take a trade. This is universal. I'll show you crude oil in a second after this video is done. But then you'll notice we come in and it got inside. Here's a yellow trigger that came in, yellow trigger here. I don't have break even +1 on this one, on the S&P, because what you may want to do, you may want to let the trail get you out. You may want to let the trail be your stop. So sometimes on these reversals, these yellow triggers inside of the zone, you want to let it breathe a little bit. So what you can do is you can use the trail. I got 4 trails in here, automated trails, where you can let that be your stop. You don't have to. So my 4th contract, you want to see if it can run like this. I got it out to 1,000 ticks and see if it can run. So you don't have to have that initial, you don't have to have, let's say, a specific hard stop put in there. You can still have it in there, a catastrophic hard stop if you want, let's say 35 ticks if you want. But if you want a smaller stop, if it's a trail, it will get you out the best of both worlds. Either it's going to hit your trail or the hard stop that you put in. But you can tell, you can auto trade that if you want, as far as that goes. Okay. So you can use it as an indicator or you can use it as a strategy. Turn the strategy off right there. So these, now as an indicator, you can just put it on there and you'll still get your yellow triggers if you're inside of it. Okay. You have to be inside of it. You have to be inside of it. Now we're going to let news settle down for about 5 minutes. It's about 8:39, so it's about 10 minutes afterwards. And now we can start stalking trades. So we'll start stalking trades and see if we can get, I know news just came out, so it's been choppy here this morning, but you see Reddit news, it got inside of my 30-year backtested. We're sort of chopping right now. News just came out. We're going to start letting this thing get in a direction, and we're going to start stalking trades and see if we can get some trades off in the direction of the move for us. So let me show you here real quick. One second. So to be clear, the indicator, the yellow trigger will come in inside of the 30-year backtested zone. To make sure you understand that, all trades must be inside of the zone. That's where there's a big reaction in price because the market likes to get inside of it, then move away from it. Get inside of it, move away from it. Get inside of it, move away from it. Get inside of it, move away from it. And that's happened in the last 30 years. So we want to get into that. We want to get into that rhythm with the market. So see, we're inside of, right now we're inside on the NASDAQ futures. I need a pulling candle. It'll turn yellow once it pulls in. And then you get your buy signal and there's the trade just went off. So the NASDAQ futures is fast, but this happens in all markets. It doesn't matter if it's a NASDAQ futures or what have you. You know, it's the same thing. You got to get inside of my 30. Look how it likes to come down to the 30-year backtested zone after news. It loves to react inside of the zone. Comes down to it, reacts. All markets like to do this. Doesn't matter what market is. Now, if you don't have a break even like this in here, you don't have a break even, guys. So if you wanted to take this and you wanted to trail this, you can take your break even +1 off after the second contract, and it will trail for you. It'll be an automated trail. So the trail will now be your stop. So you can tighten it up as much as you want. So you don't have to have it loose. You can tighten it up, or you can keep it loose. That's totally up to you. But you don't have to have break even plus 1. You can let the trail be your stop and your trail on the position if you want. Totally up to you guys if you want to do that. Hold on, I got this thing is 60 days back. 1 second. It's going to take a minute to load. Yeah, I can put the NQ up. Yeah, we can show the MNQ. So what you can do is when you come into strategies, so you can use this trail as your stop. So if you want a tight trail, you can put this down to 15, 14, what have you. You can change all your targets, your hard stop, etc. You can change all this stuff in here. You can go break even plus 1. You can take that off if you wanted to, and just look for the trail to get you out of the market. And then the trail will get you out of the market as far as that goes. But the key is to make you understand the difference in the setup is this. You have let me let this load real quick, get this out of the way. So what we have, we're starting to heat up here. We're going to start stalking trades here in a minute, guys. So when you get these, I want you to make sure we're clear on this, you members. Look at these trades I talked about yesterday. The difference between a regular trade, a regular zone trade is this. Now here's a difference. You'll do very, very, very well with the system if you understand this. The 30-year back tested trend is red. The parallel lines is down. We want to short. Our sell zones right there, you can see it, the dash levels, dash level, sell zone. Our 30-year back tested zone is our trend zone right there. All right, so that's not confluence because it broke above my 30-year back tested zone, but it's still my sell zone. So that's just a regular sell. That's a regular short right there. But the next one is confluence because look what happens. Not only does it stop inside of my 30-year back tested zone, that's why the yellow trigger formed, it also stopped inside my sell zone where these algos like to reverse. That's why I typed in ES setting up for a confluent short. These confluent shorts, the market really likes to move. I mean, this is an 85 down to 60, a 20-point move on the S&P in a matter of 10 minutes. 20-point move in a matter of 10 minutes. Because it's confluence. You're inside my normal sell zone with trend, and you're inside my 30-year back tested zone. That's what you ultimately want to see. This is the best trade you're going to get in the room. It's the best trade you're going to get right there. A confluence trade. You're inside my 30-year back tested zone. It reverses. The yellow trigger will fire. It will send an alarm on your account, on your computer, that we are looking to short the market. The arrow will fire. The auto strategy will get short there also. That's what we ultimately want to look for. That's the trade we want to look for. Now, what I said before, you can take their break even, like this is the NASDAQ futures running right now, and I'll put the NQ up for you so you guys can see it. The minis. But you can use a trail to get you out and use it as a stop. So you see that it got inside of my 30-year back tested zone. That's the only time they'll go long. There's your reversal. It just took this trade, but look, the trail will get me out. The trail will get me out. Instead of just doing a hard stop, the trail will get me out. And why that's important is that you'll get some big trades where, you're talking some big movement. We're talking about some big extended moves like this. So you can, instead of just saying, hey, let me go, because this thing will break even after the second contract is hit. So let's say you on the S&P, you want 4 contracts, 1 point and 8 point, or 8 ticks, 4 ticks and 8 ticks, so 1 point and 2 points on the S&P. it will break even after your second contract at 8 ticks. I made it the second contract break even +1 instead of the first contract because you always get knocked out after the typically the first contract. Now you can set a lower contract, let's say 4 ticks. It's not going to break even +1 at 4 ticks. It'll wait till 8 ticks that you put in, and then it'll be break even +1. Now you got the it can breathe, and then you get some runners like this. Or if you don't want to put the break even, what you can do is you turn it on and use a trail. You can use a trailing system like this. You can make it as tight as you want or as loose as you want. You go in there and you can make it as tight as you want per contract. So you can change your trail. So your trail, it doesn't have to be all 62. So if you got a 4 tick first target, you can bring this all the way down to a 10 trail to keep it tight. And it will sell all contracts if it breaks that 10 because you're looking for an initial first hard move of 4 ticks or 8 ticks. You can go 10, 20, 30, and then 62 or 54 is your last trail. So you can stagger, you can keep it tight initially. So you can keep this tight initially in here on the trail and then slowly loosen it up and let it trail for the big run. So that's something that you can do also if you guys want to do that.